Hey guys, Irina Allison here. I would love to address a very good comment / question that was posted on one of my previous videos. And the question was, how do you as an investor continue purchasing investment properties in today's market when the interest rates are rising? It's a great question, so I would love to give you a few of my recommendations. Suggestion number one, let's assume you are looking at a 2-unit property and each unit is currently rented at $1,000 a month. Talk to your broker. Do your research. Can those units compared to other units in the market be rented for higher? I'm going to give you a really good example. One of my investors purchased 4 duplexes in spring of this past year. He closed on those units, spruced them up, painted them, added a couple of new fixtures, couple of new appliances. We re-rented those units at $1,500 a month. That is $600 increase from $900 to $1,500 a month per unit. I cannot tell you how many times in my career I have come across properties and buildings where the rents have not been increased for years. I have seen buildings that have not gone through rent increases for 6, 8, up to 10 years in a row. And a lot of times what happens is owners don't want to rock the boat with an existing tenants. Why? They're in fear of losing a tenant, okay? So what a lot of times those owners don't understand is the property values are changing. The market is going up. Your real estate taxes go up. Maybe you have homeowner association fees. They're also going up. They're not staying in the same place. Do not be in fear of losing tenants. Take a look at the market and evaluate those properties on a yearly basis to see if they're up for the rent increase. So when you're looking at those properties that are rented at certain rates today, make sure to explore comparables and talk to your broker to see if the rental value of that unit can be increased. Suggestion number 2, I want you to go through this property and look at it creatively. Is there a bonus room that could be converted into potentially another bedroom? Is there a useless space of some sort that could be transformed into a walk-in pantry, a closet, a unique type of storage? Is there anything that you can add to this property as a value? Is there any feature that could be added, reconfigured to give a better value to this rental property? Okay. Suggestion number 3. We have come out last year out of what I call a real estate fever. Properties were selling way above asking price. People were waiving appraisals. People were waiving inspections. Properties were not even in best of shapes and they were still selling over asking price. We're out of that real estate fever and out of it for a while. Some properties are sitting right now in the market 45, 60, 90 days and even longer. So if you really like this property, go after it. Submit a much lower offer to the seller. See if they're going to take it. Submit it at the numbers that make sense to you as an investor. If they don't take it today, give it another couple of weeks and reapproach the same seller with the same offer. I cannot tell you how many times I have personally purchased the properties where I have approached the seller with the same offer for a few months in a row. Okay? My next suggestion to you is remember a very catchy phrase. Marry the house, but date the rate. If you like this property, I really want you to remember this phrase. Marry the house, but date the rate. Remember, rate is not a permanent thing in your life. It's not fixed, okay? So if your pocket allows, maybe put a larger down payment to go after this property. If your pocket allows, go buy this property outright, no mortgage. So think about it. You purchased the property maybe with a larger down payment, or you potentially purchased it with no mortgage. First, you surveyed the rents in the area and you've increased the rents. Maybe you added value to that property by creating an extra bedroom or certain special features. So now your property is worth more. Do you know that you can either refinance or take money out of the property that you purchased as early as 6 months from the purchase? So think about it. You raised the rents, you've approved the value of that property, and now potentially that property can appraise for much more than what you paid for it. So you can technically potentially even take out everything you put in that property in the first place and more. Remember, look at the market. Can you charge higher rates? Talk to your broker. Look at it. Look at the property creatively. Is there something that you can do to add value to this property? Make lower offers. Be persistent about making those offers. And more than anything, remember, if you love the house, marry the house, but date the right. Thank you so much. Have a beautiful day. Bye-bye.